Friends, welcome to my channel. Let's see where Bank Nifty will move tomorrow, what strategy we need to apply, what we can expect from the market. Friends, if you look into the Bank Nifty chart, I don't need to tell you, like, you might have experienced and you might have taken like lots of stops. Sorry, you might have experienced and volatility, and you might have taken lots of stops. Some might have made the profit and some might have lost the money. So that was the reason why I didn't give any of the calls from the morning. The reason behind, like, I was expecting a volatility, and after 12:30 I was expecting a trending market. But when the market was coming downside, I was not interested, because when the market is coming at lower levels, the market might find a multiple supports. As you can notice, like, the market came yesterday's low and it took the support and it bounced back at the higher levels. So I was not interested in buying anything, but somewhere at these levels, just a second, somewhere at these levels, like, I gave you the calls and we got nearly 100 points of a move. We just need 100 points every day to make a money and to make a consistent money in the stock market. Well, as you can notice, like, there is too much of volatility in the market. There was too much of sideways when it came down. The premiums, it was all about adjusting the premiums. They crashed the VIX and they adjusted the premium. We have discussed on budget strategy. I just want to show you, like, I explained you like 4 kind of patterns. As you can notice, when you go at a 1 minute time frame, I explained you, just a second. I explained you, just a second. Well, I explained you first, there was a 4 chart patterns. The first chart pattern was bid over price action. The market goes higher and it bids all the way and goes higher and higher levels. And second one, I explained you, the market goes higher, it finds the liquidity sideways and it might extend or it might even come down at the lower levels. And third one was like market going higher levels and doing some funny things and going up and coming down. And fourth was like a V reversal. So this we can expect both higher levels as well as the lower levels. So as you can notice, like, the 4 chart pattern we have seen at a 1 minute time frame, I would have given you the calls, but I was not happy giving you the calls, because like the premiums were too high, and most of the retailers, they were not interested, as it was 700-800 rupees. I thought like the premium might get adjusted, so I was not giving any of the calls. And if you look into the 5 minutes time frame, there was even like third kind of in a chart pattern also it was formed. The third chart pattern was also formed, just a second. As you can notice, like the third chart pattern which I explained here, exactly the same thing has happened. The market went higher levels, did some funny things, and it came all the way down, and it triggered the stop loss again. It went higher levels and it came all the way to the lower levels. So these chart pattern experiences comes only when you are trading consistently, and when you are focusing, when you are seeing, like, at the budget days, what we might expect at risk event days. Not only the budget, at risk events, like the Fed meetings will be happening, and sometimes we'll be having a non-farm payrolls results, some inflation data, certain market moving news. You might see this kind of chart patterns. Well, it was completely a volatile market. I'll just take you at the order flow chart. Even at the order flow chart, like, you might have noticed like too much of a volatility in the market. The big time frame players were there in the market. Someone was selling and someone was buying the market. How do I know? The reason was behind, like, as you can notice, just a second, my order flow is not loading. Well, if you notice, at net to net, there is a good amount of a buying which took place in the market. The selling was there only to trigger the stop losses. The selling came to adjust the premiums and to trigger all the stop losses. Well, there was too much of volatility, and net to net there is a good amount of buying which took place in the market. I think, like, big time frame players, they have positioned themselves in net long in the market, especially in the Bank Nifty and Nifty. So we might see a good up move tomorrow. as today there was a high premium, and due to the adjusting the premiums, the market makers, they made the market volatile and they reduced the premium. So what we can expect from the market tomorrow? So tomorrow if the market opens flat somewhere 38,500 and if it crosses 38,600 levels, we'll look to buy the market and we'll target up until 39,000. 39,000 should be our first target. Not less than 39,000 we shouldn't book the profits, because the people who are no short here, the stop losses will be somewhere like 38,900 and 39,000. It might go and test at 39,000 levels. If the market opens flat and if it crosses at lower levels, we'll just leave the market. We won't look to sell the market because any time it might take the support and bounce back at a higher levels. So it is better we'll be looking to buy the market. We'll just avoid for the selling. And selling, if it crosses the swings and if it goes all the way to the lower levels and if it crosses today's low, then we'll look into selling the market just 1 or 2 lots. But for me, I strongly believe, and even by looking at the data, the market is still looking bullish. The institutions have bought the positions. They even bought heavily at index heavyweight stocks. As you can notice, like IndusInd Bank, which went 5% higher, and Kotak Bank was also 2% higher, and SDFC was also doing good, and AU Bank was also doing good. That means there might more to come and the market might rally at a higher levels. So even if the market goes at, if we see a very big gap up above 38,800, we'll just wait for the price action. Let the market come and take the support somewhere like 38,600. Then we'll be placing our limit order somewhere here. It might even go a little bit inside and find the liquidity, and later it might bounce at a higher levels. So we'll just leave some limit orders here and somewhere like 38,600, and we'll look to buy the market, and we'll have a 50 to 60 points of a stop loss if you're putting a limit order. Well, tomorrow also the premiums are still high. They might adjust the premiums and there will be volatility tomorrow as well. So please trade accordingly. Don't take a big positions. We'll have a very good opportunity at a expiry day. So let's wait and see what will happen at expiry. Once this level crosses 38,800, we might see a very good short covering at a higher levels. Well, nothing much to say. There was too much of volatility in the market. It was all because to adjust the premiums. The put premiums have reduced very drastically. So tomorrow they might even reduce the call premiums as well. The market might go at a higher levels and might come and do all sort of funny things to adjust the premiums. So if you want to have a trending market, the market has a position somewhere, either net long or net short. But there is a lot of volatility because of the premiums. So we might see a volatility tomorrow as well. So please trade accordingly. If any opportunity if I find, I'll post at the Telegram channel. Please do subscribe my Telegram channel and press the bell icon as well. Thank you so much.